It's day 20 of the government shutdown. Joining us now, National Economic Council Director Kevin Hassett. It's good to see you, Kevin. Good morning.
Morning.
Give me the blueprint of how you think this ends. I don't think it's that difficult for you, maybe, to go out on a limb here. Do you think the president gets involved and gives the Democrats some type of assurance for these Obamacare subsidies, or do you think he takes a hard line? And you mentioned over the weekend that some extreme measures are possible about firing people, taking away things that are important to Democrats. What do you think really happened?
Right. Well, first of all, the president has been very active throughout this process, but it's also his position that this is a thing that the Senate needs to work out. A lot of our friends in the Senate have said that it was just bad optics for Democrats to open the government before the No Kings rally, and that now there's a shot that this week things will come together and very quickly the moderate Democrats will move forward and get us an open government, at which point we can negotiate whatever policies they want to negotiate with regular order. Now, I was very pleased to see that my friend Senator Shaheen from New Hampshire, a very sound-minded Democrat, came out and supported opening the government on Friday. So it means that there's sort of cracks in the Schumer armor. I think the Schumer shutdown is likely to end sometime this week. But I can tell you that if the story that we've been basically hearing from moderates that, look, we just can't do it in front of the No Kings rally, if that ends up not being true, then I think that the White House is going to have to look very closely, along with Russ Vought, at stronger measures that we could take to bring him to the table.
So there would be negotiations about what to do. We're running out of time before November 1st. There would be negotiations about what to do with the pandemic super subsidies for Obamacare.
Well, that again is an issue for the Senate. But the Democrats passed that law. It was in an emergency for COVID, and they ended it now because it was such an expensive law. And so it's the Democrats' policy, it's the Democrats' shutdown, and it's the Schumer shutdown, and really the Senate needs to figure it out.
But it affects, real people and people in red states, and I mean, we're subsidizing health care for a lot of, but like it or not, that's just the position we're in. So there are certain people that either wouldn't have health care or where the premiums would go up so much, and not to say that it's not Obamacare's fault, because there's a lot of flaws, but you see something where there would be some fixes put in to get Republicans to agree to do that?
Again, that's up to the Senate to negotiate. But if you look at the expiring subsidies, the vast majority of people, certainly low-income people, aren't affected at all. It's just that the policy was expanded to people up to 4 times the poverty level, and so you get people who have much higher incomes than were intended to be protected by Medicaid, and they gave them basically, a free card as well back during COVID. And I think that some scrutiny about that is something that in the course of ordinary Senate business, I would expect senators should debate that. But this is about keeping the government open. Remember, the Democrats got 13 continuing resolutions that were clean when Joe Biden was there, which means that Republicans understood their constitutional duty to keep the government open time after time after time. People say, oh, the Democrats voted, for a CR 13 times, but it's actually the Republicans voted for it too, because they understand that the job of the senator is to be the voice of moderation in Washington, as opposed to what Senator Schumer's doing, frankly, where he's the exact opposite.
Is anybody talking to anybody, Kevin? Because every news report, every person we talk to makes it sound like there is not.
No, absolutely, especially like within the Senate, everybody's talking to everybody.
But does that extend to the White House? Does this extend beyond that? It doesn't sound like, like last week Schumer and Thune were saying that they hadn't had conversations.
Well, everybody in the White House has conversations with senators every day, is all I could say. And but in the end, it's the position of the White House that the president believes that the Senate needs to work this out.
Hey, Kevin, do you think that, given some of the events in the credit market, there's some new proposals to raise FDIC to $10 million or something? The Journal takes issue with that, says it wouldn't be for all banks. I guess it'd be for some of the small, not the money center banks, given what happened with Silicon Valley Bank shares and others. But the Journal says 250 is fine for 99% of the depositors at these institutions. And this just would increase the moral hazard of banks not minding their P's and Q's if they had even more FDIC coverage. What do you think we ought to do?
Well, I could say that we looked at what was going on last week with the stress about banks and some defaults. I spoke at length with a large group of CEOs at the end of last week to see what they thought, especially big bank CEOs who have, and some small bank CEOs as well. And I think that there's not a heightened level of stress that's unusual at all right now. And if you look at the strength of the economy, we've got GDP now growing at about 4%, and the strength of the fiscal situation in the U.S. Joe, do you realize that if you extrapolate what we've done this year, that the deficit this year is going to drop by $600 billion relative to last year? That $600 billion drop explains why 10-year treasuries are going down, not a weak economy. If you go back to the Fed's preferred measure, the Lauback elasticity of interest rates with respect to the deficit, that's, it's about 0.5 or 0.6 of the drop of the 10-year should be coming from the big reduce of the deficit from our very fiscally responsible policies. Well, what that does is it makes it so that there's more private capital for the rest of the world because the government is not taking away all the capital in the economy. And so it should make the financial sector much stronger.
I saw something last week that when you take everything into account, that it wasn't falling quite as much as previous estimates. So you know what report I'm talking about?
No, I'm sorry, I didn't see that one.
You only know the good ones. Okay, so you're sticking $600 billion. Is that take into account tariff revenue, or that's not even taken into account?
All we have to do is look at what's happened this year. Since February, the deficit over the same period last year is down $350 billion. If you just extrapolate the difference between last year and this year, you get up to about
stock market 600, right?
Yeah, right. Well, that actually generally helps with revenue as well. That's right.
Yeah, because you get some tax revenue. What about China? I think the president said trade war. You said Friday, not a trade war. It is concerning that the idea that 0.1% of value in these rare earth metals is subject to some type of export action from China. That was a real shot across the bow. What did that represent from China? Are we not doing what we promised we'd do in some of the negotiations where we thought we had the framework for a deal? What really caused that, do you think?
Right. Well, we were surprised by China's action, but we've got the best team in the world negotiating with the Chinese this week, plus President Xi and President Trump. They've got a very close friendship. So our expectation is that Secretary Bessent is going to land this plane, and he's got meetings this week that I think will help clear up some misunderstandings. That's what I'm hoping.
Kevin, where do you think the U.S. economy is now? We're going to get the CPI number on Friday. Do you have numbers that we haven't seen yet, or things that you're kind of relying on with the government shutdown affecting a lot of the data flow?
Yeah, one of the things that happens at the White House, and you have to be careful the way you speak about it, is that if you call up a CEO and say, how's it going, including banks, credit card companies, and so on, then they'll give you an honest read. And basically, I think throughout, everybody thinks that the momentum of the third quarter is continuing. There's nothing that's moving in the opposite direction. And so, yeah, I think that we're very solidly confident that the momentum that you see in the second and third quarter is going to continue as we move forward.
Do you get more from the CEOs than maybe the average person would get from the conference calls? Because we've heard from a lot of these CEOs with earnings recently.
People will make available confidential data to us once we promise not to disclose and so on, yes.
Tariffs I can't find $600 billion. I got it for fiscal 2025.
I'll send you an email, Joe. My guys just read it. It was 570.
1.775 trillion, down from 1.816 trillion. That's only $41 billion. How do you get the?
No, it's down. So if you're going over the calendar year, then for this calendar year, it's already down 350 billion.
Okay, this was fiscal. Yeah. This was
right. So that's the mistake you made. But the thing is, the fiscal year numbers.
Mistakes.
No, I'll just say, but don't forget the fiscal year numbers are blown up by the first quarter of this year, which was a Joe Biden quarter where he was throwing money out the window. And so that's the thing that's the difference. It shows like how much money he wasted to compare the two numbers, frankly.
And then there is some, and the tariffs are taken into some of that is offset by some tariff income as well, right?
Yeah, the tariff income is part of the story, a big part of the story.
Part of the story. Okay. Where do we want to go? So many things to talk to you about. Kevin, I guess a question that Andrew brought up earlier from I don't know whether you'll mind if I mention a Jason Furman piece, but he says the entire positive parts of the economy are due to AI right now. If you back AI out, we're actually, at best, just treading water because of tariffs. And I think he said, Kaplan was on, and he said tariffs and immigration, not having. He said the uncertainty of the 12 million illegals that are living here are causing a slowdown in the economy or something. He's a Democrat, obviously, Kaplan. But,
no. Well, look, Jason's a good guy and a friend of mine. The thing is that I haven't seen his analysis, but I can tell you if you look at the second or third quarter of this year, then consumption growth explains a big chunk of GDP growth, which is close to 4%. But the first quarter, which is what we inherited for Joe Biden, was actually a really bad quarter. And so if he's basically saying what happened this year and then looking at the first quarter and averaging it into the second and third, then saying that's the Trump effect, then once again, just like with the deficit numbers we were talking about, what he's doing, he's taking really junky numbers that we inherited from Biden and trying to use those to confuse people about what's going on. I mean, right now, if you look at GDP now for the third quarter, it's like a little bit under 4%. And the consumption contribution for ordinary folks, how much their consumption is going up because they feel optimistic and have money in their pockets, is like 2.3. And so maybe I'm doing it in my head, maybe about 60% of the growth of GDP in the third quarter is consumption. And consumption it's not all AI. It's not all AI. But we're really pleased to have an AI boom. And if you look at the capital spending, that for capital spending, a big share of that is like these data centers and everything. And so that you can definitely see in the data. But don't forget, capital spending is just a small fraction of GDP. And what really matters in the end is the consumer. And the consumer is not consuming like crazy because of AI.
Like talking about the Clinton economy. Well, if you take out technology and the internet and
take out everything that's positive, you end up with a negative. Oh my goodness!
It is what it is.
Kevin, I have another question. You all are able to get more information because you can call up CEOs and ask them how things are going. If you heard bad news, if people said, "Wow, this is really starting to get to be a problem," what would you do with it?
Oh, it's my job to come on this show and talk to you about what the macroeconomy is doing and to give you my best guess every day. And I don't think you guys have ever seen me dodge a question. I don't think. You can go back and try to find one. But my view is that it helps everybody in the White House and everybody in markets if we do the best we can to figure out what's going on and then speak the truth about it. And as you recall, during COVID, when I was on the air, we had some pretty negative weeks. We had a minus 32% quarter, and we were very straight up about it all the way through. But right now, the numbers are great.
All right, and so Besson's going to meet with Vice Premier, I think, and then does the president's meeting with President Xi, does it depend on how this goes, or is that on, or you can't really say for sure?
I haven't gotten a Monday morning readout on where we are on that. I apologize.
But you didn't think that might be a good idea to get that before you came on, Hassett? I mean, you didn't think, well, I should get that? No. Thank you.
Yeah. All right.
Are you going to be, have you gotten the nod on Fed chair yet?
I've got the best job in the world right now.
All right.
You know that.
Thanks. Squawk Box returns. Squawk with us.